You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
All right, everybody. That music means we're back, baby. We're back in the studio. I know you missed us. Got your tweets, got your emails. What are you guys doing? Taking all that time off? You know, it was the end of the summer. Got to take a little bit of a break. My wife pointed out to me that that's probably the longest I've been off of a microphone in a decade. So it was kind of refreshing, nonetheless. But we did have content coming your way, so you guys didn't miss out. You still had OPR hitting the network. You had a bunch of best ofs and other fun stuff. You had some interviews and everything else hitting the network while we were gone. So we didn't leave you completely in the lurch. The ONR, you know, the OIRN, as we like to call it around here, ONR is our new show, then never really shuts down. It just kind of, it slows a little bit. But the great machine that is the network continues to rumble along. And now we're back here, Thursday, the 6th of September, live in your ear holes, talking a little bit of OB at our new/usual time of noon central here. And you guys know where you can get us, of course. Join us live on Mixler. Love to see you in there, so you guys can ask us questions and bug us live during the show. We do like that, even though if Andrew says he doesn't. We like it. And then, of course, you can always get us all the usual platforms, your iTunes, your TuneIns, your Mixlers, the mobile apps, or I should Mixlers, the Google Plays, the TuneIns, all that fun stuff. I like Pocket Cast, but to each platform, to each person, their own. You guys can pick. We don't judge. As long as you listen, we welcome you here on the show. And of course, however you listen, hit us up live after the fact, questions at theoptionsinsider.com. That works, or on all the social media platforms, or the web feedback form, or you name it. Our friend there just rattled it all off at the beginning of the show, so you know how to hit us off. New show, new network sound, by the way. Hope you like it. New network sponsor as well, so make sure you're checking out fidelity.com/options. They're going to be popping up on a lot of our shows here on the networks. A lot of you out there probably thinking, hey, I didn't think of really Fidelity as an options player. Well, they want to change that perception. So head on over there, check them out. If you're playing with their stuff, make sure you tell them you heard about us, heard about them, I should say, on us, on the Options Insider Radio Network. They would appreciate that, and so would we. So head on over there, kick the tires, and light the fires, as they like to say. Fidelity.com/options. And let's get to my crew here. Got the usual gaggle of crazies joining me on the old all-star panel today. Let's go out to the hinterlands. You haven't been out there in a while. We were in New Hampshire not too long ago, but haven't been all the way out to the far reaches of Maine, where I see he's doing stuff like putting boulders in and all sorts of crazy nonsense. Yes, we are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show, sir.
It's a pleasure to be here from my boulder rolling.
Did you miss us? Did you miss doing the show? I know it's been so long. Do you remember what all these buttons do, what your headset does, how to talk into it?
You know what? Really, I just want to make sure I remember my mute button so I don't screw up after Tucson, regales us with his doing stuff strategy blocks. So it's good to be back. I didn't break any fingers moving the rock, and things are okay.
Yeah, I never really go on Facebook that often, and I opened it up the other day, and I see Andrew just huge boulders. I was like, what are you doing? What are you doing up there in crazy town land? So if you too want to learn about boulders or perhaps something about options, he is the single options go-to source out there in Maine. He has single-handedly caused Maine to be the #1 options destination per capita in the U.S., at least according to Google search rankings. So check the man out. Hit him up over there, Andrew at OptionPit.com. Ask him some questions. Maybe ask him why he likes boulders so much. You never know. And then moving on over, St. Charles, he does well out there, but it's kind of, the volume he does is kind of dwarfed by downtown Chicago, which was why it's hard for Illinois to climb up those ranks. But we are joined by Uncle Mike Tusa from St. Charles Wealth Management. Uncle Mike, welcome back to the show, to you as well. Do you remember how to do this? It's been so long. Well, I guess the answer is no. Uncle Mike. You got to hit that button.
I pulled an Andrew.
There you go. You answered my question.
Andrew, and I did the mute button. Oh, my goodness. I haven't had a mute button error in probably 5 years. Oh, my goodness.
My victory is complete.
So we'll take that as the answer being no, that you not remember how to do this. So while Uncle Mike figures out all of the bells and whistles over there in St. Charles Wealth Management, we're going to keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block. This is the portion of the show where, surprise, surprise, we break down some trades. We like to talk about a few trades here or there, things that are going on, things that are lighting it up. As we're kicking off the show here today, things are happening. Things are moving and shaking. Most of the major indices down. It kind of depends which indice is your flavor of choice, just how much down they are. The S&P is kind of the Goldilocks of the day, only down a mere 0.6%. The Dow is kind of the laggard on the downside, fractionally unched pretty much on the day off about 0.1%. And then we got tech-heavy NASDAQ just taking a drubbing off over 1%, about 1.3%. So not a lot of tech love out there in the marketplace today. And all this red on the screen means VIX cash back in rally ho mode at about 1490 right now. Intraday got as high as 1541. So we're in a 15 handle again. I know no one predicted that on vol views. Of course, we were predicting for last week, so we'll have to adjust for the curve when we do the show tomorrow. But I don't think anyone had a 15 handle in there anytime soon, unless Russell was on, and he's always got some crazy high number in his back pocket. Of course, our old friend VXX also popping back over the 30 handle. VIX up, BXX. Chances are it's going to be up nearly 4% today, up about 1.16 out there. So a lot of things lighting up. Let's go back around the horn in reverse order. Let's try him again, see if he remembers how to do it. Mr. Uncle Mike, sir, first off, are you there? Can you hear me?
I am here, and I can hear you.
All right, good. Now that we've gotten that out of the way, what is catching your eye in today's activity, sir?
Well, I mean, since we've spoken last, we've hit the new all-time highs, and markets have pulled back. I don't know if it's necessarily anything that's to be majorly alarmed by any means, but just in looking at SPY, for example, we're roughly $4 off the all-time highs. It's less than 2%. So with that, I think it's interesting that just the tone of a lot of the financial media does appear, at least to me, to be very doom and gloomy on the markets going bad again now for whatever reason. So from that standpoint, we're really not that far off the all-time highs. And in terms of what's catching my eye, the pullback, of course, but a few names that are kind of coming to the top of the list that I'm sure we'll talk about. Facebook, of course, it's getting the tar beat out of it. Alibaba has gotten the tar beat out of it recently. So definitely that. My beloved silver is down again on the strengthening dollar. But aside from that, I would just say that it looks like we're just in for kind of a really mild pullback that feels like a big pullback just because the market's gone up so much. And when the market goes down a little bit after it's gone up so much, it feels a lot worse than it actually is. That is, well, unless you're in Facebook.
Yes, unless you're in Facebook. All the tech stocks, of course, getting under the crosshairs of Washington. And when that happens, it tends not to be favorable on their prices. Facebook off another 6 handles today, nearly 4%, right around 161. That's kind of just been just the tale of them ever since their earnings. Going into their earnings, they close right around 217. How far back that seems. Because ever since then, that was back, of course, on the 25th of July. They got their wings clipped quite a bit there, coming open up the next day, 178, and now we're back in the 160 handle. So the most recent crosshairs of DC adding to a bit of a string of red that's been going on out there in the old FB of late. Mr. Rock Lobster was catching your eye in VIX and VXX land, and what are the crazies up to? I haven't checked in with the crazies in a long time. What are they slinging out there in option pit land?
I think, you know what, VIX has been, I wrote a blog last week about VIX is never, ever going down again. And I think part of the problem is, you know, what is volatility pricing? So you've got a lot of overseas turmoil. Remember that it all kind of started with this Turkish lira thing, then it kind of spread, you know, Brazil's having their problems. Then the Indonesian, what is it? The rupiah, I think, is that currency. So you've got sort of this sort of mini domino with emerging markets. You know, desks have positions there. And vol here was 12. And volatility was not 12 in Turkey. It was a lot higher. You know, in Europe seems to catch a little of that sometimes. China was catching that. China's been kind of catching the trade war disease. I look at the FXI recently. I mean, it's had quite a range, but it has not been able to get anywhere near where it was before this whole trade war thing started. So, you know, I just think there's some of these emerging markets and things like that are kind of having a tough time with the current policy. It's potentially threatening. It's always been potentially threatening. Remember, it used to move the markets a ton, and not very long ago, April, February. So my thought is that since there really isn't an end to it, we could keep seeing this creeping VIX, creep. I don't know where it ends. Today is actually, I think, the first day that the SPX moved. Still not down 1%. But I would say at least it's in a fairer range now. The Qs have moved quite a bit, so I think some of the volatility is also coming from the crazy vol in the Qs. You know, Amazon running way over 2,000. Now it's back below 2,000. So all of that stuff is just making the market more volatile. I think as well, like the elections aren't looking as good for the Republicans, so there could be like impeachment stuff and there isn't that sort of happy, taxes are going down, regulations going down, everybody's happy. Now the market's got, they've got more bad news to worry about than good news to look at, even though the economic news has been, for the most part favorable. So it's enough to making people take profits, sell some stuff. What else? How else are you going to say it? And it doesn't help when all those congressmen get up there and, because they're real smart and they start, talking to, Sheryl Steinberg or what's her? I think that's her name. I can never find.
Sandberg.
I can't remember exactly. Huh?
Sandberg. You're not leaning in with all the ladies in the Giovinazzi household.
You know what? I did not lean in on Ford. I
remember
her. I just remember it's like Cheryl and Jack Dorsey's there, and then Google's like, well, we don't care because we're Google and we're super gigantic, and they wanted a CEO to yell at and they didn't get one. So historically, that's been painful for those companies. I remember when Microsoft used to give the federal government the high hat in the late 90s. And that was literally the top for Microsoft stock for, better part of a decade until probably 2009 or 2000. Actually didn't actually pull out of that was in the 20s forever, and it didn't really pull out of that slump for 10 years. It really just started coming out in 2013, 2014. So, you're a company, you operate in the United States, you have to kiss Congress's butt, even if you have $20 billion, because they can change the rules. Generally, Congress doesn't do too much, although, regulation, everybody can argue about that, but they can. So that's taking stocks off their highs. Simple as that. That's taking the Qs down. That's taking some volatility up. And that's what we have. So there's, like I said, there's probably more bad news than good news, or just, a dearth of good news. I'm trying to get a vol trade on, but I don't think I'm going to at this point. It's more of kind of what I would call a slider, meaning I don't think vol is going to spike, but it could, until there's actually some news. So that's where we find ourselves. I don't think we have enough real underlying movement in the U.S. equities to justify 15 VIX, but it's there. But I don't think it's going to hold on there forever. So I would think the range is more like, maybe down to 12 again, something like that. I don't think we're going to see those lows again until after the election. Just because, 30 days from now is now early October. I know it's hard to believe, so vol will start picking up that November juice in, 3 weeks or something like that. So I just don't see it getting super low. And that's really, I know that's not much of a prediction, but unless we have, really bad news or something more bad out of the emerging markets, I don't see it going hugely high either. So it's more of kind of, like I said, more of a slider trade. We want to try to generate some premium by selling stuff and just hedge for disaster. And I think that's the market we've got, at least from now until the first earnings come out in the middle of October.
I like that. Given Washington the hi-hat, you can always count on the Rock Lobster for an antiquated saying or two, peppered in here amongst. But you're right, it didn't really work out too well for the folks over there at Softy, leading to what I've often jokingly referred to, only half jokingly, as like that lost decade. Great for premium sellers out there. They didn't really do a heck of a lot, so you didn't get a lot of premium for it, but you kept most of what you sold. So that was a good thing. You're not getting a ton, but you're keeping it, so that there are worse things, as opposed to having a lot of juice and then getting whipsawed out all over the place and losing money. So that was a good decade for premium sales, not so much for people who held the underlying. It was, shall we say, a bit of a lost decade. We'll see. A little bit too early to tell. I don't think we're at a lost decade for tech anytime soon. But yeah, you're right. When they go up and thumb their nose at DC. They tend to get a little ornery, those senators. I'll just look at the tongue lashing they gave the Google in absentia yesterday. You send a mid-level guy, send a VP, let him take the tongue lashing. At least you got somebody there to represent. Now you're just there in absentia, and it looks bad. And they're just going to have a field day at your expense, which they did. So all the tech names feeling that love today, and volume showing that, or I should say volatility showing that. Speaking of volume, getting ahead of myself here. It's that time of the month. It's the beginning of September. It means it's time for us to look back at what the heck happened in August from our friends over there at OCC in terms of what the numbers were for August. And surprise, August was a pretty robust month. Coming out for overall options volume, cleared contract volume from our friends at over at OCC, easy for me to say, in August, up 10% to 433.7 million contracts. That compares to last year, right about 396 million contracts. Year to date, they're also up nearly 20%, 19% cleared volume with 20.3 million contracts compared to 17, that's of course ADV, so that's daily volume, 17 million contracts this time last year. Let's drill down a little bit into what we're interested in, because OCC clears a bunch of stuff. We'll throw out the securities lending and a bunch of other stuff that's not on our radar. Really. Let's drill down into the options. Exchange listed options volume, 426.2 million contracts in August, up 12% from this time last year. Drill down a little bit further. Equity options, a total of 384 million contracts. That's up 17% from August of last year. A little bit further, let's get to the cleared ETF options. That hit 145.2 million contracts. That's a 5% decrease, actually, from August of last year, when it was about 153.6 million contracts. So interesting there. cleared. ETF options not exactly moving and shaking. And then kind of the dark spot that it has been for some time now, index options. Index options volume down 18% in August to 42.2 million. It's interesting because you'd think those two umbrellas, ETF options and index options will collectively contain most of the large macro index players. You got SPX, you got SPY, you got other things kind of going in those two buckets. And both of them down in August. So not a lot of big macro index playing going on. But still, year-to-date ADV is actually up in the index options. It's up 12% from this time last year. So August, a bit quiet. It's been quiet for a while, actually, on the index front, which is kind of interesting. But overall, the ADV is still up. Just shows how explosive February and the surrounding months really were from an overall volume perspective. They continue to just skew the numbers for this year. You take February out of the equation, it's a completely different year from an overall options volume perspective. Let's jump to a little bit thing we like to pay attention to as well. Not a lot of numbers on these. They don't do a ton of them, but it's still informative nonetheless. Futures. OCC clears some futures over there. Primarily VIX. They also, of course, have the SIBO Bitcoin futures as well. The futures volume down 50% in August from August of last year. The 7.5 million contracts, that's down 50% this time last year. Year-to-date ADV in cleared futures, 414,000 contracts. That's 27% lower than this period last year. So again, the ramifications of February and the VIXocalypse, easy for me to say, continue to be felt here as we see the unwinding of XIV, the neutering of SVXY and some other products in that space really eating into the volume in the VIX futures space there, as well as a number of other factors. FT would point to that. No one wants to buy long VIX futures. I'm not sure I really buy that, but still a lot of different factors to point to. I think the unwinding of XIV certainly had a lot to do with this. Mr. Rock Lobster, any surprises to you here? Are you of the same school of thought as I am, that it's XIV and SVXY that are really to blame for the shall we say, the tamping down of the future space over there at OCC this year?
Well, I mean, you have to think, right, that those things traded some contracts. So I've seen a lot of stuff, come through in the Twitter sphere and blogosphere that, it didn't contribute that much. But I just thought there was a lot of trade in XIV, and all that stuff just went away. So SVXY is literally a shell of its former self. So I don't see how, how that's not hurting the products. And well, another thing is it just might make people just go to the futures. As far as risk point of view goes, you buy the XIV or you short VIX. So short a VIX future, apparently you could lose 90% either way. So I do think that had a huge impact, though. I don't know how it cannot.
So you're like me, you're not buying the Financial Times' argument that no one just wants to be long vol right now. That's why no one's buying these things. That's where all the volume is went away from.
Right.
There's no vol bulls to be found anywhere, Andrew. I don't know if you knew that.
I think the problem is people at the Financial Times that write newspaper columns don't understand really what people do. They buy VIX futures and they buy a buttload of equity, and they just let the market go, and then hopefully they're up more money than the S&P 500 when it's all said and done. So, I mean, people use those futures, and that's something I do in the Vol newsletter and teach people is, using that stuff to back spread to get, better returns, because you're not really looking just at the SPX. You might be looking at like a basket of equities that you think is going to outperform. You just want to spend a little money and hedge disaster. So a lot of funds, Carmen Line Broadcap Fund. We do something very similar to that. It's a little trickier, but that's what we do, and it works pretty good. So I don't think that, the fact that demand for those products for people that like to use vol products is there. I don't see how that goes down, given all the kind of bounciness and opportunity we've had. So, you pull the plug on 25% of the volume or however much the XIV generated every day. I know it was a pretty big number, continually. And I got to say, can't believe I'm saying this, Tusa, but I agree with Longo right now on this one.
Uh-oh. You can tell we've been on break for a while. Everyone's happy and agreeing with me. Uncle Mike can't find his mute button. All sorts of craziness.
I'm just gonna claim umbrage just for out of spite on that.
Just for old times'
we can't
sake.
handle such a thing.
Just for old times' sake. And I think I make fun of our friends at FT every now and then, but just to make, I think it was a guest academic who wrote that article. So we know how the academics sometimes have a loose grasp on reality when it comes to the financial markets. But still, that one always cracks me up. There's no more vol bulls out there. That's why no one's buying VIX futures. Anyway, let's keep on rolling. Maybe people are buying Tesla puts. Let's find out. It's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. If you forgot what we do here, it's been a while, I understand. This is the portion of the show where we break down some of the weird, the wild, the wondrous, the head-scratching paper that is lighting up the old options market. Let's kick things off. We haven't done this in a while. I haven't had a chance to check out what's been going on out here in a while. So let's go back to our old friends, the mystery puts, the crazy town puts, call them what you will out there in Tesla land. Yes, the Tesla Jan 2019 50 puts. By the way, before we even get into that, Mr. Rock Lobster, did you know, I saw some people tweeting at us with this stat, which is kind of interesting. Tesla, of course, right around $280 as we're talking right now, so off quite a bit. It's actually about 30% below right now, Mr. Rock Lobster, where it was when your boy Mr. Musk came out there and tweeted about having the funding secured to go private at 420. It is now 30% below that level. So I guess all that Sturm and Drang didn't really work out the way he planned. But yeah, all the Tesla bears pointing that one out. All the Tesla bulls angry about it. But an interesting stat, I thought, nonetheless. Certainly there were some highs in between there. But yeah, back below that level, which is right around 355. I think it was when he tweeted that out. So got up to about, pushing 400 for a little bit there. Then back on the dark side. All that dark side should be good business for these dark side puts. Let's see how they're doing. Let's start off. Jan 2019 50 puts. 200 on the tape today. The stock kind of, for Tesla, unched only off about 0.5%. That's pretty light for, actually about 1/3%. That's a pretty light day for Tesla. Let's see if intraday, how much of a range we had. Well, we had a decent little range here. It's like about 5 or 6 handles or so out here, maybe a little more. So, and that's not bad, but right now it's kind of settling in close to unched for Tesla land. 200 of these mystery puts hitting the tape today, so kind of light, but almost 70,000 open on this strike. 69,000 and change. The big day still was back in about 3 weeks ago on August 20th when we saw 11,000 hitting the tape that day. That really juiced up. There was a lot of back and forth that day too, because the OI then was about 62,000, and after that trading went up about 67, 68,000. So it wasn't all opening. A little bit of back and forth on that strike. Since then we're pushing about 69, almost 70,000. So the OI continues to creep inexorably towards 70K. Let's see if we can hit it. Also worth noting, 200 of the 10 puts going up today. Maybe a bit of a funky vertical, 50-10 vertical. Does that one float your boat? I don't know. That's a bit of a weird one. Those are 23,000 open there. By the way, our old friend Mystery Puts trading 85 cents at 89 right now. So they've had quite the run. This is so exemplary of how you don't need a delta for these things to move. These things are all Vega all the time, and a little bit of gamma kicking in there now too, just because they're getting closer. January not as far away as it used to be. Fancy stuff to watch out there. Also worth noting the 50 puts in Jan 2020. 50 of those on the tape today. Those are trading $4 at 405. So if you want a little bit longer, it's going to cost you. Now, it's going to cost you $4. These things were just $2 not too long ago. So those have moved quite a bit as well. And 100 of the Jan 2020 10 puts on the tape today. 6,000 and change open there. Those are trading 50 cents. So Mr. Rock Lobster, which of these are you gobbling up for the Carmen Line Fund, sir?
What we have looked at is we haven't looked at puts per se, but mostly put butterflies and stuff like that. We were pricing some stuff like that. in our different rooms, in our gold classes and stuff. So, and I wrote a blog on this when it happened. What was that, 2-3 weeks ago or something like that. So, I nailed exactly where it was going. Crazy luck. So, it's just, you look at something like this, and when you have big events, you have to start thinking like differently about. You're not looking for like $1 or $2 anymore, right? If they get funding, that's a 425. It rallies a little from where it was, but if they fall apart with the funding, it's going back to where it came from. So you had huge move potentials. The vol in there is sky high, and for good reason, because nobody knows where the heck it's going. So right now we're looking now. It tends to gravitate around the 300 number. That's when the bull and the bears seem to kind of punch each other in the face somewhere around that level. It's big. It's an even number, so that's of course there's the law of even numbers. That's where things go. Tesla's been suffering a little bit now, though. I think the next big number is 250 again, because now the funding. One thing is time ticks away, and without new funding and all this other stuff, it's not. That news doesn't get better for Tesla. Time is not its friend when it doesn't pick stuff up. So, plus they're talking about indicting, Elon Musk and all. The guy's the whole company, for crying out loud. So, if he's not there, what the hell is that stock going to go to? That stock's that's not going to be down $100 in one day if the SEC does something like that. So, you think about that, and in my mind, you kind of plan around that. So, if you want to keep playing it until something changes in a drastic way, they could always be rescued by Apple or Google or somebody else that could easily just scoop them up for some price. I don't. I think that's always a possibility. Although that would be spending an awful lot of money for a company that doesn't really make any money yet. But I think their assets are worth a lot. So I don't know. But I still think that 250 will happen relatively soon. And I think the new range is like 200, 300, or 200, 320, something like that. Until we get new news.
By just invoking the Apple buying Tesla thing, you're gonna have every Tesla bear coming at you out of the woodwork, just hating the is at option vol. Go hit them up.
Exactly.
Search for the rock. You say anything about Tesla these days, and people come at you from both sides. It's so crazy how just virulent people get on this name. Speaking of Tesla, I was just handed a bit of breaking news. I wasn't planning to do this much Tesla, but there's always news out there. Apparently, there's a lawsuit. Stop me if you're surprised, Mr. Rocklobster. Someone is suing Tesla. This time it's a short seller. Short seller, he's apparently upset. Going back to that tweet we just mentioned, he's upset about that tweet, and he's alleging price manipulation. Apparently this guy must have got forced to cover when the stock was around close to 400. And now he's like, wait a minute, the stock's off 30%. Now he's pissed he didn't get to ride it all the way down. So what's he doing? He's suing. So there you go. Another day, another short seller suing Tesla. I guess that's just kind of, that's like saying there's unrest in the Middle East. If it's a day that ends in Y, chances are that's probably happening. But yeah, that's a funny one. One of the many reasons that Tesla is maybe in the red a little bit today. But these things, it's kind of like water off a duck's back. The lawsuits, whatever, it kind of just bounces off Tesla, which is kind of funny. Let's keep on rolling with our odd block. With these earlier shows, we actually like to take some time, because it's kind of early in the session, to pull up some UA from today. We like to look back at some ones we've highlighted on recent shows and see how they worked out. So we're going to do a little bit more of that, because it's kind of fun. A, B, it clears out our backlog of trades to watch, which has been good. That backlog was getting pretty extensive. Let's go back now. We're going to start today in NOG. This is Northern Oil and Gas Inc., ticker symbol NOG. We talked about this one back on May 21st. Today the stock's at $3.13, off 18 cents, or nearly 5.5%. Not a good day for NOG. We talked about it back on May 21st. We talked about it was our cheapie call play of the day, when someone came in and picked up actually looks like they might have been writing these. They were these three calls. So pretty much at the money calls going all the way out to D's at the time. They were about 7-month calls, about 5,000 of them going up. And it looks like, let me see here, they went up for 45 cents, so a little bit off the bid. Looks like they were indeed probably selling these bad boys. So again, if they were buying them, it looked all right. The stock did move a little bit in this time frame in the many months it's been since we highlighted this trade. The stock got as high as about $3.80 back on the 31st of July, so it did spike a bit. These options, if he was indeed writing them, and it looks like it might have been, they kind of went in his face. They got up to about $1.10. Not too long after he did this trade. So that would probably explain, because looking at it first as like a buy, and that would explain why these things were still open, because they are still open right now. There are about these, what do we got? These 3 calls. There's about 8,000, close to it, open on this strike right now. So our friend put them on 45 cents. They're still a little bit in his face right now. They were 55 at 70. Today's sell-off has dropped them a bit. They're 40 cents at 55 now. So he could probably try to scratch them, put a 45-cent bid in there and do that. But I'm guessing he doesn't want to do that. I'm guessing he wants this bad boy to actually work out for him. Back when he did the trade on the 21st, let's see, the stock was a lot lower. It was about 245. So yeah, it's kind of been a wrong direction for our friend here, Mr. Rock Lobster. And in general, are you also a fan of writing calls on these cheapy names like this, or is this a play you'd stay away from, Mr. Rock Lobster?
Writing calls in $3 stocks.
He did get almost 50 cents for it, so he got a decent chunk. Granted, he was writing like a 7-month call.
Right. Oh, okay. Well, I mean, that's yeah. It's sort of, if you're buying a 3, I can see like I guess income or somebody owns the stock, but I'm just not. To me, you write calls on stock, you're still selling puts, and you could sell puts in a little stock like that, but just sell the puts. I don't know. It just seems like a lot of aggravation for not a lot of payout, I have to say. I mean, it's percentage-wise, it's good, but yeah, I don't. It's like a kissing my sister trade. It definitely pays a return, a percentage return. You just keep it on and just let it go. I mean, that I totally can see that as a. And if they take you out, they take you out, and you make a pretty decent return. So there's nothing wrong with that. But I guess there could be worse trades. There you go. It's just somewhere in the middle of the pack.
Yeah, I guess if this guy's an underlying holder, as we assume they are, then he probably had a better option, when the stock was nearly $4 to get out there. But c'est la vie, hindsight always 20/20. Sometimes these guys can't get out; they don't want to let it get out for for tax reasons, other things like that. Either way, we don't cover a lot of call overwrites on cheapy names, a lot of call buying on those. So it's kind of interesting just to flip the script a little bit. So far, those are still open. Obviously, they won't be closed till D, so at least the option won't expire till D. So we'll keep an eye on those and see. Maybe we'll come back towards the end of the year, see how our friend has fared. If he was patient, maybe it'll come back and he'll get his precious 45 cents he's been waiting many, many months for. Now, let's go on out. Another D's trade. This one is in Dean Foods Company, ticker symbol DF. Closing today, $7.36. But we're not talking about today's activity. We're going all the way back to April 30th. April 30th, when the stock was nearly $9, actually about $8.50. It got $8.50 up to $8.80. A pretty volatile day for Dean Foods out there. So stock was a bit higher, about $1 and change higher. And we saw someone coming in, just a put palooza out here in DF to the tune of the D7 puts, lighting it up 20,000 times for 40 cents. Someone just gobbling up all the offer head and more there for 40 cents. This was right before earnings. Earnings are coming up in about a week. It was on the 8th of May. So this was a pre-earnings trade. Obviously, the trade extended well through earnings to December, but obviously he's putting us on ahead of earnings with some eye towards that. And it turned out, at least from the outset, this trade was kind of in his face. Another one, kind of a theme for the odd block today. Almost immediately in your face trades around earnings. This time the stock was $8.50. It gapped up to over $10 almost immediately within like a week and change. Right around the earnings time, the stock just gapped up to over $10. So these puts were immediately in his face. Granted, this kind of trade, he's probably an underlying holder, so he's probably got a smile on his face on that leg. But we're just looking at the option side. That's all we can really reasonably intuit here. And that leg, at least, not looking so good. The stock actually got as high as $11.14 back on the 6th of July. So these puts were looking pretty cheap. And he might have been saying, man, what am I doing with these crazy 7-handle puts? Do I really want to be stopped out there? But if you listened when I mentioned this name at the top, you'll know something's changed in the stock. It's back down around those levels again. Right now it's $7.36. So the stock has since reversed almost 4 handles from those high levels. So these puts back up there again. They're trading like 45 to 50 at 55. So he's got a little bit of juice on them. Hopefully this guy had some stock and he let it fly at those high levels. But the puts are still there. The puts are still open to the tune of 24,000 open on this strike right now. 100 going up today. But yeah, so our friend, not so well timed on the option side, shall we say, but hopefully he unloaded some of his stock. He didn't take off his hedge or wind down his hedge, so that's kind of interesting if he did that. So either way, kind of interesting. So hopefully if he didn't dump his stock, Mr. Rock Lobster, then this has kind of been just a whole ton of movement generating nothing for this guy. What's your take here on this put palooza that's still there in Dean Foods?
This is another one of those like companies, like fundamental story. It's like, how cheap does this company get? Like, is Dean Foods going out of business? They sell milk, like where is this thing going? To me, I thought this customer, and I wasn't quite sure the way these traded, but they bought these puts. I have to assume they're against some sort of stock position, because the stock was kind of really cheap. It was at, multi-year lows. And to me, it just looks like a value play, where, maybe I would be actually the opposite. I think you just write a bunch of 7 puts and try to generate a couple of bucks out of that, because at $7, you can get 50 cents for them now, something like that. So, there's a little return potential there, writing a near the money put in a stock like this. So I guess the only thing is if they bought these puts and rode the stock, maybe they got rid of the stock, but it feels like a defensive play, because it's at such multi-year lows already. Where's it going at this point,
Yeah, so far, just on the option side, both of these trades, I'm going to be charitable and assume that guy dumped a bunch of stock at a much higher level, Mr. Rock Lobster, because we're just being optimistic here today. Probably not, but let's be charitable and assume that. But right now, at least as it stands on the option side, we got 2 trades that are they were in their face a lot worse. Now they're better to kind of unched. But still, they had better opportunities. One of them was way in their face, and it kind of came back to unched. And now we had one trade that was looking really good on the stock side, maybe not so much on the option side, and now kind of back to unched as well. So 2 kind of trades so far. Let's see if we can close it up with a better one, or our last one here. Going all the way back to April 16th to talk about Devon Energy Corp, ticker symbol DVN. Closing today, $40.70, but we were talking about it all the way back on the April 16th show. And back then, the stock was, $33.62. That's where it closed on the 16th of April. So shall we say a wee bit lower, about 7 handles lower than where it is right now. At the time, we saw someone coming in, loving themselves some May 37 calls for a whopping 52 cents, gobbling up nearly 8,000 of those bad boys, lifting the offer on those as well. Earnings were coming out not too long after, about on the 1st, so this was obviously an earnings play as well. Good timing on the stock side. The stock closed around $42 on expiration, so the stock moved in his favor. These calls were about $5 in the money. There were a total of this volume, about 11,000 went up on that day of the May 37 calls. The weird thing is, Mr. Rock Lobster, looks like our friend here never closed these. They went, and by the way, if an option's expired, a good place to go dig up some history about it is our old friend, the Flow Master, and his service over there at Trade Alert. Go check it out. You can go look at the life flow history of a contract to see what happened up till when they closed. And these things still had about 14,606 of these contracts open, these May 37s open on expiration. And if you look at the trades, obviously the big trade was the day we profiled it, which was back in April. And then ever since then, you had some little lots trade in there, and then all the way up to about the 16th of May, because the expiration was on the 18th in May. 16th of May, there was about 500 traded. That was really about it. Nothing traded on expiration day, and there was still 14,000 and change going up. So he never really came back to take these bad boys off. Which is kind of weird. So yeah, interesting stuff here. I'm looking here. The second they traded about 9,000 times, but the OI just increased on that day. So yeah, it's kind of weird. It looks like, unless he swapped them out in the second, it looks like he never took these things off, which is kind of weird for a trade that pretty much went his way, Mr. Ropp. I guess maybe he really he wanted to get himself some stock around $37. I don't know.
Yeah, this so you did take delivery. You go buy some options, and you're like, oh, you know what? I'm gonna take delivery, and you know. And I mean, you can. I one thing I learned early. So if you get stock, if you exercise stock options early to buy, you know, unless you want to own the stock, because I think you have to pay a capital gain when you exercise. So I figured you just want to sell the stock at that point and just take the money you got. So, again, you picked some really weird trade types to sort of start.
That's why we call it the odd block, sir. They're weird.
This is kind of a bit of an odd one, but you know, it looks like they made some money. But it looks like he never closed them out. So either way, he made money. If he took delivery of the stock, he's still up some money. But you know, it's not nearly as exciting as when it was at $42. But you know, it's the odd block. You're right.
He took the definition. He took the definition of an option literally. He's like, "This is my option to buy this stock. So I will definitely take this stock now that it's at $42.
I'm buying it,
and I'll let all that nice juicy premium I paid just go away. Well, who needs that? You know, when I'm sitting on a $5 profit." Oh, weird stuff. More just evidence, listeners, that the size money, not always the smart or the informed or the educated money here on the old Outblock. Let's keep on rolling. It's Thursday. Time for you guys to take the reins for a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. You guys know the drill. Mail's been piling up while we've been on hiatus. So much we can get to. By the way, you guys overwhelmingly wanted Bitcoin options on our poll from the week before, from last week when we went on vacation. We went to that crypto conference. By the way, if you hadn't had a chance to check it out, we posted the audio from that session. Might be some video floating around as well. See if we can grab it and post it out for you as well. It's a fun session talking about all things crypto, the future of crypto derivatives with CME and Tony Saliba, good friend Matt from Orats and Bill from the Blockchain Advisor, all kinds of fun stuff. So check out that audio if you haven't. But we asked that question specifically to CME, when we getting some Bitcoin options? You can hear the answer there. But yeah, you guys want your Bitcoin options. It was like somewhere around 78% with the rest breaking down with Ether, then Ripple, then Litecoin kind of by market cap there. Let's see. This is an interesting one. And I want to look out some more of the mobile apps before I answer definitively, because there has been some tweaks to some ones, and I haven't played with all of them recently. We got a question here. A question we kind of get a lot. But it's kind of the most recent iteration. Jason Antsy asked, want to know would you or your followers have a recommendation on the best discount brokerage, ideally low cost per contract and the ability to enter spread orders on a mobile device? Thanks, appreciate it. The low cost, I mean, you can't go wrong with a lot of the names you talked about here before on the show. A lot of people like of course, our friends over there in Connecticut, the Interactive Brokers. In terms of, if you don't need hand-holding, that's the place to go. I think the reason I hold off on recommending them for you is because I haven't played around with any sort of mobile functionality on that platform in a while. So I need to refresh myself on it before I fully recommend the mobile executions. I haven't played around with that. Have either of you guys played around with IB Mobile recently?
I haven't in a while, but I have in the past. It's actually not that bad of a mobile app, but I think just the thing with IB, it's trader beware if you're on your own with them, and that customer service is not their top priority. Everything's automated there, and that's just the way it is at IB. That's how they roll.
Just talk about damning with faint praise. The app's not that bad. But yeah, that's the one. Actually, a lot of people have been hitting us up saying they really like, and I'm not going to recommend them either because they're still pretty nascent. But I've been surprised how much love the Robinhood guys are getting with their. I thought they'd be terrible, and yeah, a lot of people are hitting us up saying they actually are having good experiences with them, and they're very cheap. So low cost per contract, they hit that one. A lot of people like what the dough stuff, now the tasty stuff over there, how that's working. I haven't played with their mobile app either. Again, I've been on vacation, so I need to go do a spin through all the mobile apps again to see what everything's doing. I know our friends over there at E-Trade until the merger were doing some pretty cool stuff on the mobile side. That stuff may have changed since the merger. So I got to do a refresh of all the mobile. That's why I'm hesitant to jump out. But you can't go wrong with any of the ones you recommended before. IB. You guys like Livevol over there, right, Andrew?
You know what? We've had some problems with whoever acquired Livevol.
Sterling Trader acquired.
Yes, we've a lot of client dissatisfaction. We actually, we're working with the Tradier people, and they're using TradeHawk, and they have like a one price fixed commission for the month. You just pay a fee for the month, and you trade all you want. So. I'm using the platform now. I don't know about mobile because I don't do mobile. I literally, if I have a position on, I'm never out of my office anyway. So, but the front end is really good. It's got a ton of features in it. And it has, if you trade probably more than 50 contracts a month, you should take a look at, TradeHawk and Tradier too. So, super cool front end. So there you go. I have no idea about a mobile app though, because I know the TradeHawk front end is pretty new, so I don't think they've done that yet.
Yeah, I think I remember talking to Lex, and he's been on the show. That's another, again, why I've been hesitant to recommend them either, because I haven't played around with that. This question is specifically about the mobile, and I think if I recall, he had like a responsive platform, so that's kind of how they do the mobile. You log in like you regularly would, and the platform should adapt itself to your device of choice, HTML5, all that stuff, but I'll have to ask him for sure. So yeah, all the platforms you mentioned before, I have some problem myself actually recently with the upgrade of Live, all this on the analytics side. They have a new platform, which is really cool. Does a lot of cool stuff, but the problem is it does so much cool stuff that it's taken me a while to put everything back in order. The old way they had it at least was I had the workflow down so I could pull up stuff very quickly for a show like this. The new version of Livevol with all the data is good. I like having that research, but it's taken me a while to get it in a format that's usable for me. And again, on the mobile side, they don't really have mobile. Again, it's probably more responsive. You're seeing a lot of this responsive design, HTML5 kind of taking the place of a dedicated mobile app. So yeah, those are, I want to refresh, but for my own edification, I want to go do a kind of my own spin through the mobile offerings of all the big brokers again. And I want to come back to this question in a bit and see. But our standard kind of suggestions of IB, if you're very savvy, and then they have some issues with how they do VIX over there as well. So if you're a big VIX trader, maybe IB isn't the place for you. But IB is a place, if you can handle yourself, you don't need to bug them for customer support. IB, a decent place to go. You can't go wrong with some of the other ones you mentioned before. Toss as well. Big beefy install on the platform, so watch out for that. And some of the newcomers, like, of course, Robinhood getting some love, even though they're still in beta, and the tasty stuff over there getting some love as well. So a lot of players out there, a lot of choices. You're not starved for choice in the options space out here these days. All right, let's do... got so many. Let's see if I'll squeeze in one more here. Maybe we'll do another big Q&A question. Here's a strategic one. I think we can answer this in the time allotted. Florence wants to know, when trades go against you, do you close or roll the whole thing out, or only the losing parts? I like this. We kind of touched on this a little while ago, I think, with the calendar question someone sent in. Like, what do you do with your legs if it goes your way? Do you keep them or close it out? I've always been of the mind of like, trying to keep the whole thing. If I put it on as a spread, whatever it is, if it's an iron fly or butterfly or just a vertical, something like that, I try to view it as a spread. If you start messing with things where you do like, let's say you do an iron fly and one leg really goes your way and one leg really goes against you, and then you just close out that one, and then you sit there and you're like, oh no, you wait for the come back. That's where the trouble can come bite you. 'Cause now you're unhedged, of course, and you have all this potential for negative fun to come your way. So I know people who do that, the active guys like to do that, but I find that to be a road to ruin very often. Mr. Uncle Mike, we'll start with you. When you're doing spreads and trades like that, do you take them off piecemeal, or do you leave them on as take them off as an entire unit?
Typically, I take them off as an entire unit. Sometimes I'll piecemeal them if, let's say, I'm in a vertical and I close out the short leg of a vertical and the long leg has like a penny in it or something like that I'm not going to get anything for anyway. Then I'll leave that on, and then that's just kind of a cheap lottery ticket. So sometimes I've done that, and I've actually one time it actually came through for me, which goes to show that you should really close out your short options when they get to the nickel level, because that means there was somebody on the other side of that trade that did not think it was quite as fun as I did that day.
Yeah, I'll let you slide on those, because that's kind of just common sense. I sell that leg for nothing. There's no point. I think we all do that. So I think we'll let us all slide on that. Mr. Rock Lobster, what do you say? Are you a piecemeal man, or are you a kind of nickel and dime and each leg its own thing kind of guy?
Well, there's a couple of rules. One is I don't think you should cause yourself more trouble than you already started with. So I know there's a lot of people that you sell this and then you adjust by selling this and you sell more premium, and sometimes that can work. But if it blows up, I think it kind of crushes the risk profile of whatever you're doing. So generally I just close all the trades as one thought. So if it was one thought going in, it's kind of one thought going out. There are times when I roll, and I have to be honest with you, it's rare, because rolling to me is like, it's probably just telling me I should close. When you try to milk something, I feel like you're pushing your kind of luck. So I would say no, but I'd say the number one rule is don't give yourself more risk than what you started with. So if you're going to do anything fancy and you got some great idea and you're like, oh, well, this could work out great, except my risk is 10 times what it was when I started, maybe you should think that that's not a great thing to do.
Yeah, that's why I say it's usually ends in disaster, which is why I keep it on as a unit and see it when you set it up that way. It's the same way you take it off. That's usually a road to healthier, saner trading, and usually more profitable too. You start nickel and diamond and piecemealing yourself, you end up dramatically increasing your risk on a trade that was pretty much mitigated to begin with. So that's why I say that road often leads to ruin, and it also leads sometime to our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, so we got a few numbers coming up towards tomorrow, towards the end of the week here, and let's see what else we got. We got all the big news we touched on top of the show, that Amazon hitting the 1 trillion club, very exclusive club. But other than that, what's catching your eye? I'll start with you, Mr. Uncle Mike. What's on your radar, sir?
Well, I want to see if we can come back from this pullback. We hit new all-time highs. We pulled back a little bit in the S&P. So whenever you get a little bit of a pullback, for those of us that are really big bulls, this could be a buying opportunity. So definitely going to be watching the screen with that. And I believe we have non-farm tomorrow. So excited about that, to see what's happening and where we're going to be.
Yeah, I don't work on a farm, so I don't watch the non-farms, because I'm not on a farm. I am a non-farm, so therefore it doesn't interest me. All right, Mr. Rock Lobster.
Well, then it should interest you.
You're right. It should, technically. It should be the other way. It's all people like me who should be interested in that name. Mr. Rock Lobster, are you also, well, you're in the hinterland, so you kind of are quasi-farmer, so I don't know how you fall in the non-farms thing. And then what else is floating your boat?
Well, the non-farm things are for all the people that aren't farming. So, which, apparently now is there's only, 3 big agriculture businesses and then a couple of small farms.
It's the entirety of the U.S. pretty much.
So here's the thing. You got kind of sour news. You got kind of sour overseas news, sour overseas things. Remember from Turkey and all the we'll just call it the blunt force foreign policy by the current administration. So that just it generates uncertainty. Let's put it that way. But everybody is looking for, is the economic news continuing to grow, to get better? I saw some 4% plus GDP growth estimates, which are enormous for an economy our size, if it's really that big. So, there's that. I still think the technology story is a great story, as, everybody in India gets the internet, let's say. It's just like that whole global tech growth story I still think is there, although it will wax and wane. What I'm saying is I don't think this VIX lift will sustain. But I think the days of like 9-10 are over for this year. I don't see how that's happening again until at least after the election. But I could see us getting back to 12. So I'm trying to set up trades for short term around 12, but the vol to pick up again. So that's kind of the idea. And very curious to see if Amazon can hit that $1 trillion mark again. I guess it slid down. I don't know exactly what that number was, but while I realize Amazon is kind of taking over retail, it's not like they're Apple that have, $300 billion in the bank. Amazon does not have $300 billion in cash in the bank. It's one of those, there's no way I would say buy Apple and short Amazon, because it just would be a crazy trade. But, is that trillion worth the same as the other trillion? It's I don't know. I feel like 1 trillion is a better value than the other trillion. That's all I'm going to say there.
Talking about a pairs trade between the two. Mr. Rocklobster, you have to actually make money, though, to have, billions in cash sitting there.
Yes.
One company makes gross amounts of money and just keeps it in cash, and the other does all right, but nowhere near the same, shall we say, the same profitability level. That music, unfortunately, listeners, means we come to the end of at least our first show here on our broadcast day on the old network. So if you're listening live, take a break, get yourself a beverage, hit the restroom, come back in about 28 minutes at 1:30. We'll be hitting up some TWIFO, talking all things. We're talking a lot of equities. Going to see me equity guys on. So if you like equity options and vol and skew, we'll be hitting all that. Don't worry, in a little bit, as well as maybe some crude, some gold, some crypto. Who knows what's going to make it on the show this week? I think aluminium may be making it in there for all you Brits out there. So lots of fun stuff on the docket. Tune in to TWIFO again in about half an hour, 1:30 p.m. Central, 2:30 p.m. Eastern. If you're listening to the podcast, don't worry, it's already coming your way on your podcast device of choice. You don't have to go anywhere. But before we do, let's go back around the horn one last time. Let's see what's up with our cohorts. Let's start with Uncle Mike. Sir, what's cooking in the land of all things St. Charles Wealth Management?
We got a lot going on. Right now, it's not been released onto the website as of yet, but it will be soon. I'm going to be doing an event at my office in St. Charles on the evening of September 18th. If you are interested in that, you want to get on the early list because of the fact that it is a very small venue. If you want to guarantee your spot, shoot me an email at mtosaw@stcharleswealth.com. Just send me a note saying you want to be on the list. And also, for those of you in the Raleigh-Durham area, I will be speaking at Duke University on October 10th. That evening. We haven't released the information on that either, but if you want to guarantee a spot for that event, also please send me an email at mtusaw@stcharleswealth.com, and I'll make sure that you are on the list even before the list comes out. And if you are looking for a financial advisor who's not afraid of the word volatility, give me a call at 312-212-3531.
Uncle Mike making the rounds of academe. You fancy pants, sir. So you're gonna be hi-hatting us yourself pretty soon, doing your academic speaking tour here.
We'll do what we can.
All right. And he's not speaking in academia, but he may be speaking to you guys with some of his webinars. Mr. Rocklobster, what's cooking in the land of the pit, sir?
Almost more things than I can shake a stick at. Easy123. Go to the Option Pit website, Easy123. We'll do a new webinar, Options Made Easy, actually showing you how to trade options right, but also trying to maximize risk reward. Just simple strategies, simple how to use options. But, like I say, if you don't make your money back taking our course, we'll give you a refund. You can't lose. So go to our website and check it out, Options Made Easy. Mark's doing a free webinar on the 11th at 4:30 Eastern.
Wow, money back guarantee from the folks at the pit. What do you have to lose? Check it out. Take a webinar. Maybe you like it. Maybe you come to the Chicago event next year and Mark buys you a delicious steak, which is just delicious because he's paying for it. So head on over there, sign up, and kick the tires and light the fires, as they say. And on behalf of the Rock Lobster and Uncle Mike and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for waiting so patiently for us to come back. We love you guys out there. And we'll see you back here in about half an hour for TWIFO. Otherwise, if you're on the podcast, we'll see you back next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.